What if I told you the smartest money in America, the people who built their wealth brick by brick, are quietly moving billions into an asset that doesn't pay dividends, doesn't innovate, and just sits there? You may think gold is old-fashioned, a relic from your grandfather's basement. But here's the truth. Millionaires aren't buying gold because it's shiny. They're buying it because it's a signal, a warning, a tell that something deeper is shifting beneath the surface of the global economy. Imagine this. You're standing in a room where everyone claims everything is fine, yet the richest person in the room is slowly edging toward the exit. That's what's happening right now. For most people, gold feels like a last resort, a fallback. But for wealthy investors, it's a strategic alarm system. The question is, what's setting it off? To understand this moment, we need to take a step back, not to ancient times, not to conspiracy theories, but to the last century of American financial history. Because every surge in gold buying has followed a familiar pattern: rising debt, falling trust, and a world suddenly unsure of who's really in control. Let's go back to 1971. Richard Nixon closed the gold window, effectively removing the dollar from the gold standard. Overnight, money stopped being a promise backed by something tangible and became a promise backed by confidence itself. Most Americans didn't immediately notice, but millionaires did. They watched inflation soar, savings evaporate, and the dollar's value crumble like a sandcastle hit by a wave. Their response? They bought gold, and gold exploded in price. Fast forward to 2008. Banks collapsed. Markets froze. The financial system felt like it was held together with duct tape. Again, the wealthy rushed into gold, not because they were doomsday thinkers, but because they understood a simple truth. When trust collapses, people flee to the one asset that doesn't require trust. But wait, that's not the whole story. Something different is happening this time. In 2024 and 2025, millionaires aren't buying gold after a crisis. They're buying it before one. Why? Because the warning signs are flashing earlier and brighter than before. The national debt is rising faster than the economy can keep pace with. Interest payments on that debt are eating a bigger slice of the federal budget every year. And inflation, though cooling on the surface, has fundamentally reshaped daily life. Groceries are more expensive, rent is stubbornly high, and wages can't stretch like they used to. You may think inflation is just numbers on a chart, but to investors, inflation is a signal that the monetary system is under stress. And that stress leads to one of the most powerful economic forces on Earth: fear of currency erosion. This is the quiet fear driving millionaire behavior today. It's not panic, it's preparation. Think about it like homeowners insurance. You don't buy it because you expect a fire tomorrow. You buy it because the risk is rising and the cost of being unprepared is catastrophic. But gold isn't just insurance. It's a hedge against one specific threat: the loss of purchasing power. And right now, millionaires are reading the tea leaves and seeing something uncomfortable. The long-term value of the dollar isn't as solid as it used to be. Before we go deeper, consider this. When wealthy people shift assets, they rarely announce it. They move quietly, early, and deliberately. By the time the public notices, the opportunity has usually passed. And here's the cliffhanger. This surge in gold buying isn't just about inflation or debt or fear. It's about a new force, global rebalancing, that's reshaping the financial world in real time. Leave a comment. What was the most important lesson for you so far? Because if you think this is only about American millionaires, wait until you see what foreign governments are doing behind the scenes. Foreign governments aren't just buying gold. They're stockpiling it at a pace we haven't seen since the late 1960s. And that shift is sending a message wealthy Americans can't ignore. You may think global politics feels distant, something that doesn't affect your everyday finances. But here's the truth. When countries start accumulating gold, It's because they're questioning the stability of the world's reserve currency, the US dollar. Consider China. Over the last decade, it has been quietly increasing its gold reserves, month after month. Not because it plans to return to a gold standard, but because gold gives it something incredibly valuable: independence. In a world where economic sanctions, trade wars, and geopolitical tensions can freeze dollar assets overnight, gold is the one form of wealth that can't be blocked with the click of a keyboard. It's portable, it's universal, it's neutral. And China isn't alone. Russia, India, Turkey, and even developing nations in Africa and South America are turning to gold to diversify away from dollar-based systems. They're not abandoning the dollar outright, but they're hedging against a future where the dollar's dominance isn't guaranteed. This is the part millionaires are paying attention to, not because they fear the U.S. economy will collapse, but because they understand a simple rule of wealth. When global confidence fractures, value flows to assets that don't rely on trust between nations. Let's connect the dots. The US dollar has been the backbone of global trade since World War II. Oil, commodities, shipping, international loans, most of it is priced in dollars. This gave America enormous influence and created massive demand for its currency. But as more countries shift to gold, it signals a desire to weaken that reliance. And if global demand for dollars falls, the value of the dollar could slowly erode. Millionaires see this as a slow-moving tide. Not a tsunami, not a panic, just a powerful current pushing the world toward diversification. Gold becomes a kind of life raft in that scenario. But wait, there's another layer. It's not just governments and investors buying gold. It's central banks, and their reasons may be even more important. Central banks don't chase trends. They don't speculate. They buy gold when they sense deep structural risks, long-term inflation, unstable markets, or the possibility of a prolonged debt cycle. Over the last few years, central banks have purchased more gold than any time in modern history. That's not normal behavior. That's a shift in strategy. Why does this matter for millionaires? Because central banks are the ultimate insiders. They know the condition of their own economies better than anyone. And when the insiders start preparing, others follow. Think of it like this. If you saw firefighters quietly positioning trucks around a neighborhood, no alarms, no smoke, no panic, wouldn't you wonder what they know that you don't? This is the energy surrounding gold right now. But here's where things take a dramatic turn. The gold rush among the wealthy isn't just about protecting money, it's about timing. They're not buying gold because it's already skyrocketing. They're buying it because it's still undervalued compared to the level of global instability. Let's break it down. In times of low inflation and stable interest rates, gold usually stagnates. But when inflation rises and real interest rates shrink, gold tends to surge. And right now, even though inflation headlines are cooling, the actual cost of living hasn't returned to pre-pandemic levels. That means the pressure is still there, just hidden behind averages and political messaging. Millionaires understand this difference, the difference between reported inflation and experienced inflation. They live in a world where they can see supply chains tightening, commodity prices fluctuating, and currencies competing for influence. And their conclusion is simple. Gold is the safest bridge over uncertain waters. But that's not the cliffhanger. The real story is what happens when average investors start noticing what the wealthy have already done. Because historically, gold's biggest surges happen not when millionaires buy, but when the middle class follows. And that moment may be closer than you think. Continue whenever you're ready. Picture this: a tipping point where everyday Americans, people who haven't bought gold since the 1980s, suddenly rush in. That's when gold moves from a strategic asset to a cultural phenomenon. Millionaires know this pattern. They've seen it with tech stocks in the 90s, real estate in the 2000s, Crypto in the 2010s. The wealthy act early, quietly. The public acts late, loudly. And when the public arrives, prices explode. But why would the middle class jump into gold now? Because the pressure they're feeling is real, even if they can't always explain it. Groceries cost more. Rent is harder to manage. Savings don't grow like they used to. And every time the Federal Reserve adjusts rates, the ripple hits average households faster than it hits the wealthy. At some point, people start looking for something, anything, that feels solid. Imagine the psychological shift. When people realize their dollars don't stretch the way they did 5 or 10 years ago, they begin searching for alternatives. Millionaires have already chosen theirs. But here's the twist. Wealthy investors aren't buying gold because they're predicting a crisis. They're buying it because it's one of the few assets that performs well when uncertainty becomes normal. Not chaos. Normal. A world where geopolitical tension is constant, where interest rates swing like a pendulum, where markets surge and collapse within weeks. In that world, gold becomes a stabilizer. To understand how we got here, let's revisit a powerful example from American history, the inflation wave of the late 1970s. Back then, families watched prices rise month after month. Mortgage rates hit 18%. People feared the dollar was losing its soul. And what happened? Gold hit record highs. Not because people expected the end of the world, but because they needed something the dollar couldn't give them: certainty. Today's situation isn't identical, our inflation isn't that extreme, and our financial system is more resilient, but the emotional pattern is the same. When people lose confidence in the future value of their money, they look for something older than inflation charts and more dependable than political promises. This is why millionaires aren't piling into the latest tech bubble. They're looking backward to look forward. Gold has survived empires, wars, pandemics, and collapses. It's outlived currencies, governments, and entire economic systems. Nothing else has that kind of resume. But there's a second, quieter driver behind millionaire gold buying, one most people never see. It's the shift in private banking advice. Over the last few years, high net worth advisors have started recommending gold allocations not of 2% or 3%, but 5%, 10%, even 15% for certain clients. That may sound small, but on a $20 million portfolio, even a 10% position is a massive bet. Why the change? Because private banking has started modeling scenarios where long-term real interest rates stay inconsistent for years. That's the environment where gold thrives. And when private banking shifts its playbook, millionaire behavior changes with it. But wait, that's not the whole picture. There's another trigger underneath all this. Something more structural, more predictable, and more difficult to reverse: the U.S. debt cycle. Every few decades, America hits a stage where debt outpaces growth. Historically, the country either inflates the debt away, restructures it, or finds new sources of economic expansion. Right now, none of those options are easy. Inflation is politically unpopular. Restructuring is impossible, and growth is slower than the debt curve. Millionaires see the long-term math. They aren't panicking, but they're not ignoring it either. Debt doesn't cause immediate crisis. It causes slow erosion, and gold is their counterbalance. But here's the mini cliffhanger. Gold isn't the end of the story. It's the beginning of a larger migration happening among the wealthy right now, a migration toward assets that don't rely on government promises. And the next asset in that migration may change the financial landscape in ways we haven't seen in decades. Leave a comment. Have you ever considered buying gold yourself? This migration isn't random. It follows a pattern etched into American financial history, a pattern where trust in traditional systems weakens and capital flows into assets that operate outside those systems. Gold is the first stop, but it's not the last. The next destination for millionaire money? Productive hard assets. Farmland, energy infrastructure, industrial metals. These are the things society cannot function without, no matter what happens to the stock market, the dollar, or global politics. And the wealthy know something crucial. When governments face debt pressure, they often turn to policies that indirectly weaken currencies, but they cannot print food, fuel, or raw materials. This is where gold connects to the bigger picture. It acts like a pressure gauge. When it rises steadily, it's often a sign that smart investors are repositioning quietly. And when that repositioning accelerates, it signals deeper concern, not about collapse, but about transformation. Now let's make this tangible. Imagine you're a millionaire business owner. You've seen margins shrink because of rising costs. You've watched interest rates climb. You've heard global leaders talk more openly about fractured supply chains and multipolar economies. So you do what prudent wealth builders always do: diversify into things the world must have. That's the mindset behind the gold surge. Not fear, strategy. But wait, there's a twist many people overlook. While millionaires are accumulating gold, they're also reducing exposure to long-term bonds. Why? Because long-term government debt loses appeal when inflation is unpredictable, and when bonds lose appeal, capital seeks a new anchor. For centuries, that anchor has been gold. This is why the gold moment happening now isn't about shiny bars and vaults. It's about the shifting architecture of wealth preservation. Let's take a step back and connect everything. Inflation hasn't returned to pre-pandemic patterns. Global powers are reducing dollar dependence. Central banks are stockpiling gold more aggressively than ever. The U.S. debt cycle is entering a mathematically fragile stage. Private banking is adjusting its strategy for clients. Millionaires are preparing for a long era of uncertainty, not disaster, but volatility. All these forces point in one direction. Gold becomes not an investment, but a seatbelt. Because when the road gets bumpy, the people who've driven it before buckle up early. Here's something else worth noting. During every major economic reset of the last 50 years, gold didn't just protect wealth, it revealed behavior. The timing of gold buying has consistently predicted what the wealthy expect long before the average person senses the shift. In the 1970s, gold buying signaled the arrival of runaway inflation. In the early 2000s, it signaled the brewing debt crisis. In the 2010s, it signaled skepticism about ultra-low rates. And today, it signals concern about global fragmentation. That's the real reason millionaires are buying gold right now. Not because they're afraid of the next headline, but because they're anticipating the next era. One shaped by competing currencies, unpredictable inflation, rising geopolitical tension, and slower, uneven growth. They're not hiding from the future. They're preparing for it. And here's your final question, the one that leaves this story open. If the wealthy are already shifting their strategies for the next decade, what happens when the rest of the world finally wakes up to the same signals? Before you go, subscribe to receive more reviews like this. Videos that break down history, economics, and the hidden forces shaping our financial world.